Hi everyone, welcome back to Today in DeFi. In this video, we're going to talk about institutional yields on DeFi, some proven, stable, and low risk yields that you can access easily, and some actionable farms that you can do with the yield-bearing token itself. This yield-bearing token frenzy has been going on for a while here since this last few months. Extreme liquidations, extreme insolvency have also been occurring lately with the October 10 market liquidation in crypto, the biggest in history. And we're going to introduce you to some more conservative and more risk-off protocols. So the idea is to actually introduce you to less volatile protocols so that you can earn on low-risk DeFi yields that is also very simple to access. All right. So this protocol that we're covering today is called Maple Finance. So I think most of you in DeFi actually heard about Maple Finance and the strategies behind it. And in this video, we're going to talk about how to verify the risk and how syrupUSDC and syrupUSDT, which is Maple Finance flagship product, is actually accruing yield from their operations. So first of all, we're going to define why we're talking about this protocol. It's quite interesting because if you can see on the last few months, it has been picking up really consistent amount and a huge amount of TVL here. Right now it's around 3.145 billion, and this is from DeFi Llama's data. We can verify that from the protocol itself, and these are the yields that are actually tracked on DeFi Llama. So you can see here the average 30-day APY is around 7%, but it has been going down lately because of the low demand on leverage, which is stating that the market is going off risk since mid-October here. Here are the supply APYs, the base APYs, the rewards APYs. It's quite clear here on the dashboard, the 7 days moving average. And you can see here the risk rating by Exponential Fi is actually stating that it has good pool design, best assets, and the best chain, which is, but we're going to verify that because we can't blindly actually trust these. Although they are actually very good risk curators or risk analysts, we have to actually verify these risks ourselves because we're actually putting our own money in the protocol. So that's what we have to do. But don't worry, in this video, I'm going to do that for you. And yeah, this is the interface. It's pretty simple. You deposit USD or USDT. Here you can get the APY. And please do note that the APY here, 5.8% and 6% is not yet including the 0.9% average drips rewards. So the drips rewards is the rewards programs or the points program that Maple is currently having to actually reward depositors for USDC or USDT depositors. And the campaign right here is stated on their docs to actually go on until December, until this year. So these are the last few weeks that you can actually accrue for the Syrup tokens, and the eligible claim for the rewards that you can have is at 18 February 2026. It's next year. So yeah, it will be locked until this date, and yeah, you can actually claim it. So yeah, these APYs could actually vary. The 0.9% APY can actually vary through the syrup yield that you will be receiving at February 18, 2026. But even without the drips rewards, it's actually giving you quite stable and risk-adjusted yields right here. So it's pretty straightforward. Deposit USDC or USDT and get, for example, here you deposit 1,000 USDC, you get 30k drips per month, and the estimated annual yield is $60. And the same here for USDT. You can simulate what you will get 1 year. And let's go to their details here. This is what's very important. And if you can see here, the asset under management here on DeFi Llama actually varies because I think DeFi Llama doesn't actually take account into the liquidity that you're having here, into the total TVL. So yeah, these are very important details that you can see. And let's see here for the last 1 year how the APY has been performing here. It used to have really high APY since its first launch. Why? Because it's also following, and it's also quite correlated to the USD benchmark. What is the USD benchmark here? Is saying it's actually measuring the lending yield here on Aave, on Compound, on Sky USDS. If you are not familiar with Sky USDS yields, you can go to our video that is on our page to actually introduce yourself to Sky and what's its main product here. They're tracking the mainnet lending APY for USDT and USDC, as a comparison for their own performance here. So when we put our USDC and USDT into their vault token, which is syrupUSDC and USDT, which is by the way composable, and we'll talk about that later on, they will actually accrue 6.8% yield right now and 0.9% in rewards as stated before. So what they're doing with our money is they're actually lending it to institutional borrowers. So for example, here we have the loans right here. So the loan amount right here is actually stated for each borrowers. These are the collateral assets. So like usual, if you want to borrow assets, if you want to borrow USDT and USDC, those institutions or those even big players that wants to actually borrow this huge amount of money have to deposit their collaterals. And Maple here only accepts blue chip collaterals, which is stated on this dashboard here. BTC, and we got here Girosol, LBTC, and even hype tokens, but it's a very small amount of money that they're actually putting in. And if you can see here, the loan to value ratio is way higher than what they're demanding with Bitcoin here. It's almost like 50% loan to value ratio. So yeah, I think they're doing a pretty good job with the loan for each collaterals that they're receiving here for BTC. And please do note that they can actually reroute these collaterals into staking, like maybe on Lombard or even on Aave or any other DeFi protocols. And they're quite transparent with it. The purpose of them staking it is to actually get more yield for the syrupUSDC or USDT holders here. Yeah, and this is the collateral value to the loan amount. You can see the collateralization level here is quite okay. You can verify this by yourself actually by looking at the address on each of the borrowers here. It's not visible on Etherscan, but it's also visible on DBank. Yeah, it's very important for you to actually get a hold of this and how to check on. They're also even accepting ETH, and this actually also getting like EtherFi rewards, and I think those EtherFi rewards could also be relocated into yields that we're actually gaining. Yeah, but it's very minor, so it doesn't affect too much. You can see the majority of the collateral asset that they're having is actually Bitcoin. Only you can see here the loan collateral 90% is on Bitcoin, 4% is on Girosol, and yeah, all of these tokens, which is very minor. You don't have to worry too much about it. All you need to know is the collateralization ratio, which is above 100%. Above 100% is the bare minimum. Maybe if you are very conservative, above 120% or 130%. And so the collateralization ratio right now is pretty healthy. Yeah, they're also putting some of our money here into liquidity pools like on Fluid, on Aave, on Sky, that is also earning yield. So this is where our yields came from. So you can even see the interest rate that they're actually charging the borrowers here, pretty clear. So that this explains the amount of yield that we are also receiving for holding syrupUSDC or syrupUSDT tokens. So on their collateral dashboard right here, there are some collateral wallets here. On the collateral dashboard here, this is a very useful tip. You can actually play around, explore around, and click around all through the protocols and explore and verify each of their statements here and each of their numbers here. Does it add up? So there are more than 50 wallets that is actually available on this dashboard. And why are they putting it into multiple wallets? Because like always, risk management in DeFi is always very important. They are very prone to hacks, prone to hackers, and a lot of people have been trying to actually break into some protocols lately. This is the reason that they have a lot of wallets, the same collaterals. It's to mitigate the risk if the worst case scenario happened, one of the wallets actually hacked into and breached, they won't get the whole entire collateral assets. So that's a basic understanding. But yeah, I'm gonna pick one random wallet here, wallet 5, and you can see the coin bounce here, and yeah, you can see the total received, the total sent. Yeah, the total sent here is for the borrowers that are actually adding their positions, and so they will receive their collateral Bitcoin back. So right now, this wallet has 337 Bitcoin. I'm going to pick one more just to show you how to see the Bitcoin balance here. This balance has way more Bitcoin than the one that we saw, 959 Bitcoin, $93 million. So yeah, that's how you verify each of the collaterals and the addresses that are holding the collateral. These borrowers right here can, like any DeFi protocols, like on Aave, on Fluid, like on Liquidity, also be liquidated when the loan health ratio is below 1. So for example, or like the threshold ratio is below their specified ratio. For example, right here they have a collateral level of 121%. If in case coin's price actually plummets, this collateral level will actually go down, and they have a indicated level of collateral level that they're having with the institutions or with the borrowers that they have agreed on. So they will actually notify these borrowers before liquidating them. So it's a way smoother and a way, I think so you can see it as a more merciful way of liquidating the borrower's position. So they can actually top up the BTC, their collateral assets, or they can unwind their positions immediately. So it's more a seamless type of liquidation method than what the other protocols like on Aave is actually doing, because then again, these liquidations are actually managed by a team on Maple, while the other DeFi protocols are actually doing it automatically. So yeah, that explains a more smoother, a more risk-adjusted, and a more stable yield rather than any DeFi protocols here. And yeah, there's a lot of interesting looping opportunities on different protocols that I will cover right now. As you may know, holding 6.8% APY right now isn't that bad in a down market. Without the rewards, just say it's 6%, 5% APY, I think it gives you more than most protocols like Aave here. Like Aave have 4% yield on USDC, 3% yield on USDT, and it's a pretty simple process to actually earn those yields. You just have to deposit in it and maybe do weekly or monthly risk assessment and check for their details on the syrupUSDT or for syrupUSDC collaterals in their wallet. And that's for the risk verification. syrupUSDC and syrupUSDT have been integrated in a lot of different protocols. For example, here we're going to go into Morpho. You can search on the collaterals here, and search for syrupUSDC. Here you have integrated markets like PT, syrupUSDC, or even just the PT, or just simply syrupUSDC itself. You can actually loop it because the native rate for borrowing USDC against syrupUSDC is actually lower. And yeah, this might serve you some looping opportunities. So lend your syrupUSDC to borrow USDC and buy more syrupUSDC and do the same stuff over and over again until it limits. And it's not only on Morpho that's allowing you to do that, and there's a lot of protocols on Solana rather than on Ethereum that is actually letting you put on syrupUSDC as collaterals as well, like here, like on Jupiter, and they're giving you a net APY of 16.98%. And please do note that these APY actually fluctuate because the supply APY and borrow APY can vary through the demand for borrowing. The collateral yield, which is right now syrupUSDC, can also fluctuate, right? So these two can fluctuate, but what we have to remember is that for this leverage looping strategy to work, you need a higher supply APY when compared to the borrow APY. So you need to check this on maybe daily or weekly, and maybe unwind if there is a very high demand on the borrow APY and very low yield for syrupUSDC. And yeah, this is on Jupiter, but I think most of the caps are actually reached, so it shows like a very high demand for syrupUSDC looping, because Maple itself is very well known for its stable DeFi yields and the ability for them to be a collateral and for looping strategies like this to happen. Not only on Jupiter, Camino also lets you do that. For here, I already filled it for you. You can even get 22%, and please do note that these are actually incentivized, so you'll get other rewards rather than the looping APY. And you can select a huge amount of tokens here, like even the blue chip assets here, like USDC. These are more new and also incentivized stablecoins here, like on Cash, USDG, or even Cash and USDG here. So these are very interesting strategies that you can participate if the caps are actually available for you to deposit. So yeah, you can do that on Camino, Jupiter, and even put on collaterals here on Aave, but it's only available right now on Plasma. It's very new. I think they just integrated like 2-3 weeks ago. And what you must pay attention to is the available liquidity of the USDT if you wanna, for USDT or other stablecoins that you wanna borrow when putting syrupUSDT or syrupUSDC into the collateral. So yeah, liquidity is very important while doing these kind of leverage, and that's what you must pay attention to. So the liquidity, the borrow and supply APY, the borrow APY must be lower, and also the negative yield from the syrupUSDC itself. you can actually track it. And if you don't know what affects these USD benchmarks to go up and down, I highly urge you to watch our intro to Aave video, because it will actually give you a very good idea and a very good explanation on the USDC and USDT lending or borrowing rate, and how does it fluctuates and what factors are actually affecting them. Yeah, thank you for watching. If you want free news, you can go to our newsletter on news.todayindefi.com. Yeah, you can go to our news on news.todayindefi.com for free news, and todayindefi.com/premiums for a better and a more thorough guide, and to let you navigate DeFi better with us, with our analysis and our guides. And yeah, I think that's all for this video, and I'll see you in the next one.